7/14/2013, 7:30 a.m. Pacific Standard Time. I have a weekly chart on AMZN.com. It's made all-time 52-week highs. It's gone parabolically straight up over the last couple. We started breaking out down here when it hit the 285 area. When it took out that resistance on the weekly, we've gone up 4 weeks straight, 5 weeks straight up to the top to 3075. What I am going to say is I'm going to show a daily chart as well. I mean a 60-minute chart. So let's put it on a 60-minute chart. You can see starting back over here right below the $300 level on a 60-minute, these are 60-minute price action bars, is that from 290 on the dip, we ran another $17 higher on this 60-minute. And people are buying in anticipation of a good earnings that's going to be out on July 25th. What I can say that on the weekly, right here's the weekly at 295, you can see it parabolically up to 307. It started over here at a weekly at 265 with 3 weeks parabolically straight up, meaning that when Amazon was down here at 250 some time ago, back in March, is that from March of 2013, of course, we have rallied all the way up here. And Amazon's going to report their quarterly earnings on July 25th. We are saying that this thing is grossly overbought. It's been marked up in a high frequency algorithm trading software models that the exchanges use. Nonetheless, it was a great bull run to the top. It's overbought. Whatever Amazon has to say on July 25th, and today is the 14th, they are priced to perfection for the earnings. What we will be looking moving forward in this next calendar week, going into those earnings, does Amazon continue to run the move? Well, what we're going to say is that we're going to be looking at shorting Amazon again. And we haven't had that much luck with it because it's been going parabolically straight up. We've got to such a level that every time that Amazon, on whatever price range on this stochastic, when it gets up here, just like before, you get these that we're going to be looking for a weekly reversal bar. So what I'm saying is we're going to be looking at the $310 puts. It's grossly overbought. It's time to take profits. They gapped it up again on Friday. There's the daily. I'm showing the 60-minute to the traders. We're right up here at all-time highs. It's already starting to, from a 60-minute level. You can see one of the things about this whole movement, though, is that when you look at 60-minute volume, part of these moves up here were done on very low volume. So some of it was done on higher volume because the short sellers that were on Amazon got squeezed. Here's what a monthly bar looks like. Starts right here at the very low here, right, let's just call it around 278, all the way up to this monthly high of 307. That's a monthly bar. That's what Amazon has done going into a major quarterly earnings, where we know that Amazon has two parts. One part of it is that's a retailer, because that's what it does. But the other part, it's in the cloud. They have a cloud business. We used to have our website there. One of the things that we do know, Amazon is dropping their price for the cloud environment, and that's on fire. They're making lots of money in that cloud that they provide all those services. They compete with Rackspace and various other people, such as other providers that are in the cloud. CRM is in the cloud, but cloud computing and hosting has propelled this. Part of this move is that they're doing really well, but there was announcements last week that they're going to be dropping those prices within the cloud. So once again, we're priced to perfection. It's time to look at trying to get short again. The short sellers that were short were very negative on Amazon. They've been taken out all the way up here to 52-week highs. Time to get short. The earnings, look at, if you've been in Amazon for a period of time, it's time to sell into the rally. Sell the news. Buy the dips. Let the reports come out.